Hello and welcome back to Chart Pattern Trading Masterclass by Wealthy Education. In this video, we'll talk about mastering the inverted head and shoulders pattern. So the head and shoulders pattern, which is what this is a derivative of, and we have a video on that in our next section, is when the market does this. An inverted head and shoulders is just that, it's inverted. So what does a market doing that tell you? Well, it tells you that you're heading in one direction. In this case, this is the head and shoulders. This is the inverted head and shoulders. You're heading in this direction and you rally. You're in an uptrend and you pull back and you rally again, which is exactly what you expect to see. And then you pull back and then you don't rally quite as much. It's a momentum shift. In the inverse, it's the exact same thing, except we're falling. So we're falling. The buyers come in, push it higher. The sellers take over again, push it even lower. We rally. And then this next attempt, we don't make quite as much of a low. And that gives you a heads up that something may be happening. It is called a head and shoulders because it's a head and it's got two shoulders. Inverse is just inverse of it. There is a built-in pattern measuring stick. So you take the neckline, this is what they call it, the neckline where the two dips meet. You measure the height from the neckline to the top part of the head. And then once you break the neckline, you are aiming for that same amount. A lot of times you just put your stop on the other side of the shoulder. So therefore you get it, it'll vary, but at least at like 2-to-1 ratio is what you're looking for. So really this is just a heads up, and it's not until you break the neckline. It's kind of a heads up that we're running out of momentum. So you can see that the dollar popped higher against the Canadian dollar, came down, made a low, made a lower low, failed here to make an even lower low. You can make an argument for that being the neckline, and something that you should be aware of. It does not have to be straight up and down. It can be tilted like this. You just take your trend line tool, you write that right when you break out of the neckline. We did pull back. You did have some uncomfortable noise here on the 4-hour chart, dollar CAD, but you eventually got what you were looking for and quite a bit more. And like with both of these patterns, yes, there is a measuring stick, so to speak, but a lot of times you'll beat that. You'll notice that the moving averages, once we broke out of this pattern, cross back over. So in this case, it's the 50 over the 200, but you get the idea. And it happened right around 129.5, 130. So that's an area of interest as well. Let's go ahead and take a look at crypto. Let's do Bitcoin. Clear all of my drawings. Hide everything except for the volume for now. So this is a failed inverted head and shoulders. I mean, failed as in it didn't kick off. But you can see that there are a lot of patterns that occur that do eventually lead to bigger moves. So in this case, you got a little bit of an inverted head and shoulders pattern here. Not a major one, but one that tells you that, hey, maybe we're ready to bounce again. And we, in fact, did get the target pretty quickly. Let me go ahead and get rid of my drawings here. You put your moving averages on. You can see we were right there at the 200, the 50-day EMA spread out. Another thing that might be worth bringing into the conversation, there was support there based upon previous resistance at basically 22,500. Okay, so let's go ahead and look at stocks. And let's just do, let's do Netflix. So Netflix, let me put this on the daily for now. So Netflix, you can see gapped lower We made a low, made an even more low, or an even lower low, I should say, but failed to make a continuation pattern. And that kicked off this move. Pretty straightforward. We filled the gap. That's another thing, too. A lot of times these gaps, although they offer resistance, they do get filled. And that's exactly what this and that gap told you. It was an earnings miss, evidently, which is pretty common with stocks. Go ahead and put the 50 on, 50-day EMA. And you can see we broke just above it. Let's look at volume. We like volume on stocks with our moves because it's a central exchange. So you're going to have to kind of look at this closely, but you can see the volume did pick up right here as we were breaking out. It wasn't a massive spike like one of these, but it did show some effort. And that's really all you're looking for. So pretty straightforward. I mean, there's not a lot to say about this pattern other than it's a failure to continue the downtrend. Next video, we'll take a look at something called a diamond bottom pattern.